Good evening. Coming to you from Traders Community and KnovaWave, and we're going to look at the S&P. We're going to look at it through the physical SPX and also through the SPOOs or the ES. Make sure you smash the like button and hit subscribe so you can get all our updates. With all hopefully what's good for good analysis and helpful in what you're doing. Let's start off with the daily. Obviously, those familiar with us, we do a weekly report every week. We have a game plan measured out, which we've had for quite a while. We've called this, as you know, a major top of what degree. Let me just go through that real quickly with you from our report before we look at these charts. So on a weekly basis, you can see that we label this a 5. It's a question of whether it's a 5 of a 1 of a much major move up, which would fit in with those that are the opinion that we just keep devaluing the dollar. The Fed keeps doing what it's doing. We raise rates, we fail, we have another pump prime. Or this is 5 of a major level. So looking at the weekly here, we can see it was a classic. We actually got over plus 3/8 on the weekly. On the Murrey Math, we got way overboard than Chicow, and we did a spit of a spit, which we'll go through. We came down, hit the Tenkan, failed, and the big break, of course, was when it broke this channel. Fundamentally, we all know the change of rates, inflation came at the last Fed meeting, and guess what? We have a big Fed meeting this week, so that's why we're doing this. We're coming in, we're retesting plus 2/8, which was the last breakup level, and the S&P is doing a lot better, as we know, than the Nasdaq and the Russell. So below us, we have the 50 moving average on the weekly basis, and the cloud. We're very much in this. A fractal would give us a spit of this. Okay, so we move on to the daily. We can see that more specifically there. There's that 5 of 5. You can see the spit of a spit, and we've worked down nicely in 1, 2, 3. So this is our third wave. The question is this a 1, 2, 3, 4, 5 of a much lower, or is this an ABC correcting all this? Okay, so keep your views open on what all this can be. What we've seen is dramatic shift. We saw all this way up of previous bears finally becoming bulls, and those that have been bullish all the way up buying the dips. A lot of them, because of and I've mentioned before that we think this has been a bear market for quite a while in different markets. It's been distorted by just 5 to 6 stocks being the major part of these indexes. I think it's like 40% of the NAS, nearly 1/4% of the SPOOs. So that's a massive level. We're talking about Apple, Amazon. You know the villains, and that's all on our website if you want to follow it up. Anyway, we break here. We had the fractal spit here. We failed. We got the cross here through the Tenkan and the Tenkan through the cage, and we accelerated. And this was that beautiful move on Monday where it came down, retested the break right at this channel and the top of the cloud, and it just accelerated down all week. So very clinical stuff. Nice move. And we're just going to concentrate on SPOOs on this podcast. We will look at the others separately just to not confuse. I know a lot of us just trade the SPOOs and not the NAS or the other things. So, okay, we failed here. Back here on this move on the hourly, you can see that we did the 1, 2, and then we broke this wedge, and we've never really looked back. Everything's been a failed 1, 2, failed 1, 2. And you can see when we did get above the 50, this is hourly, rejected. This was probably the one that caught a few people. As accelerated back down, it was very powerful, right? And that was from Friday. So we came down and we had a lot of optionality that's been well documented. We have the January leaps coupled with the weekly gamma and some of the other options. So we had a record amount of options expiration, meaning there was a lot of premium won and lost. So we finished right at the close, right at the lows on that. And again, that was distorted, by that type of thing. Okay, so that's an overview there. Let's look at this live and let's go through it. So we just had a look. Let's just look here with the Murrey. Now, this price is slightly different because we were looking at Sierra versus TradingView, and their sources are slightly different. I would imagine it's the timing. It's like 3 handles different. Uh, it would be the data source. So don't read. Overall, doesn't mean too much. Same Murray, same clouds. So we can see here more eloquently that this was a test of that breakup, and that's also the 6/8, right? So we're just looking at this unencumbered by moving averages. So we just want time and price. So here we are, 6/8 and that. We can see below this is quite a heavy move, right? And we can get all the way down here just on this basis. So that would be your panic front. A more orchestrated, remember you can see the 3 ways pretty clinically there, right? So this is actually taking Oanda data, I believe. So that we have that there. Let's go to the weekly to compare apples with apples, what we just looked at. So here's our weekly. Well, how do I get this a little bit cleaner for us, eh? So on the weekly, we can see, so this is taking this move down here, and you can see we broke through. I just want to show you something real quickly. So this is a longer view of this, okay? Now the difference is the recount. We've kept it unrecalced on this one, just so I know where it is, and this one recalced, okay? Basically the same thing. So that 8/8, this is 4/8 on the other one. I just like to keep in memory on the recalc on the other one. That tells me about the extension of the move, those that are familiar with Murrey Math. Okay, so we can see just how far we came, right? So really this is not a big correction at all, right? I mean, it's on the thing, I think it's like 7% here to here. So you can see what we came. That's the coronavirus. This is the pump prime, and this is talk. Remember, we haven't even raised rates, so the market has got way ahead of it as far as that goes. Remember, the market is not the economy. So we can see that pretty clear where our downside target is, right? So remember so most of us are still short off that basis on the longer term swings in our little grouping. And the key is, as I've said multiple times, and this is 4 hour. So let's bring this down here. There's plenty of us were short up here. Don't think this was some big surprise thing. And then a lot got caught, and then they used the reason for the minutes. Well, the minutes were just the fad that we've been ad nauseum, and it's been pretty clinical. You didn't have to be short up here, but there's plenty of reasons not to be long, you would argue, right? Anyway, moving right along. So let's do a few lines here. We can see what's going on in the recent times. So we want let's do a quick little trend line here. So this is pretty clinical stuff, right? These spits is you buy the dip. You can see the FOMO running out of time. And so if you were to do a fractal, in other words, a measured move of that to that, let's see if I can do this. So you have this kind of thing going on, right? So you see what's going on there. So for those that look more at that rounding top sort of thing. Now that is possible that we get a bounce here because we are right at 08 support. We can get down to this -2.8 pretty easy, right? Because of the power of this move. But we saw, so this is record optionality, which means record volume if you want to extrapolate it all. because each one of them represents a share, a one loss, etc. Right? So it's not as if this didn't happen on big volume. Important thing to take into account. Let's go to the hourly. And that's that channel on the hourly basis. But I just want you to look what it did so you're more prepared for this week. So expect big moves either or. You have big events. So you also have a ton of big earnings this week that are Dow and I think it's roughly half the Dow. I mean, it's a big number anyway, but you got like Microsoft, you got Apple, you got Chevron, you got a ton of energy people, IBM, GE, a lot of these firm favorites sort of thing. So let's look at that parallel channel, see if this matches anything. Whoops, sorry. So we do have this same thing on the downside, right? So algos are repetitive, they love it. So the reason I did it like this, I wanted you to see the median. So we've been spinning around this and we've been getting these false moves. See this false little break here? See if we can bring that all the way down. Yeah, there we go. So you can see that. So that you want to keep it simple and you want to be respective of overbought and oversold. And be wary though in the reason so in KnovaWave we look at Elliot, we look at Ichimoku, and we look at Murrey. We want time and price. We want to give a good idea where it is in the future and we position accordingly. And that's what works really well, particularly in these types of markets where vol up until Friday was cheap, right? I got to 28, I think, fix at the end there. But in terms of, so you got to bear in mind and remember as markets goes up, that comes down, so it affects your optionality. You always got a put skew in stock markets ever since 1987. There's whole articles and that on Traders Community. Let's not bore you with that, but just be aware of all that. Watch your order flow and you'll see it on your dome come in. And if you're nervous, don't trade. As I've said 100 times, it's all about the mind, right? So keep all that in point. So hopefully that gives us a quick overview of the levels. They're more, the charts are on the website. Now, what we've done there also is fiddle around with a couple of, so I've shown you here all the longer squares on Murrey. Those familiar with Gann and Murrey. So on the website, and you'll see the difference from here, just watch this with that. We've actually squared some of them a little bit faster for you. That's more for your Murrey Math people. And so you can have a look at that just to see the difference, given it is an impulse wave. So this has definitely been an impulsive wave. So thank you. If you liked it, shoot us some questions, levels, what you like, don't like, any other things on levels there. And we will try to keep as much. We do a morning report most mornings, but nearly always an afternoon wrap. So follow us on YouTube, like and subscribe, and thank you for joining us. Have a great trading week. Busy week, this one.